Taking a different approach to other crowd, yesterday Tore Steen, CEO and co-founder, explains how his company CrowdStreet offers sponsors not only access to in excess of 70,000 accredited investors, but also access to a white label software product that they can use to go it alone if they wish. Welcome to the National Real Estate Forum podcast, episode 218. Thank you for joining me today. I'm Dr. Adam Gower, and this is the Crowdfund project at nreforum.org, where developers, investors, and industry leaders share insights that you can use to raise capital, build wealth, and earn passive income from crowd-funded real estate deals. The issue for sponsors coming to crowdfund real estate finance for the first time is that they must completely relearn how to raise equity capital. Coming to crowdfund real estate finance for the first time is that they must completely relearn how to raise equity capital. The same fundamentals apply as they always have, but the methodology and timing has changed. Think of it this way. A seasoned developer probably has a network of investors with whom they can sit down over lunch, explain a project and raise $1 million over lunch. They can do that because the investor knows them already, likes their style, and trusts them. But it wasn't always like that. The first time they tried to raise money, they were met with skepticism because then that same investor did not know them, wasn't sure if they were going to like them, and certainly had a long way to go before they were going to trust them with their money. Well, nothing has changed with the introduction of online capital raises, except for two things. One, the time a sponsor has to get an investor to know, like, and trust him is now measured in minutes, not decades. And two, the methodology a sponsor must use has consequently also changed. Now the sponsor must utilize sophisticated online marketing methodologies and technologies to build that know, like, and trust relationship. It is an art form, it's highly specialized, and it utilizes software products that most sponsors cannot even imagine, and yet are recipients of this kind of marketing every day they check their email or go online. In fact, we all are recipients of this kind of online marketing, whether we realize it or not. No matter how you approach crowdfund real estate, the first step to understanding how to raise capital or find deals to invest in is to understand the background and genesis of this new industry. It's easy to get bogged down in the minutiae when new laws are passed and regulations are written. So I've put together a concise summary of crowdfund real estate, what it is, and how you can benefit from it. Whether you're a developer raising capital or an investor looking for deals, I'd be happy to send it to you. Just go to the show notes for today's episode at the National Real Estate Forum.org website, nreforum.org/CrowdStreet, and I'll send it to you. That's NRE of CrowdStreet is the marriage of a seasoned real estate veteran, Darren Powderly, with a tech wizard, my guest today, Tore Steen. Their platform epitomizes the shift in the real estate industry, this migration from the offline world of fundraising to the online world. CrowdStreet facilitates the development of the investor-sponsor relationship in the online world through a focus on education and communication. In the first part of my conversation with Tore today, he takes a look back at 2017 and forward to 2018. No matter when you listen to this podcast, whether it's on the day it's syndicated or after the next downturn is in recovery, perhaps Tore's comments today will give you an appreciation for the benefits of hindsight. Be sure to listen to the end of the podcast when Tore discusses his daily habits for success and offers some advice to the wise.
Yes, and finishing up 2017, it was a great year for CrowdStreet. We raised over $200 million on our marketplace. Yes, and finishing up 2017, it was a great year for CrowdStreet. We raised over $200 million on our marketplace, and we hit a milestone of over 70,000 investors on the platform today. As we go into 2018, we're listening and learning constantly from our investor members, and so bringing more offerings to them that are at that institutional quality, with a diversity of both asset types as well as risk profiles, so that these investors can create a real diversified portfolio of commercial real estate. So we're also enhancing our platform. There's going to be new enhancements such as easier to use tools to compare and contrast the offerings in a very transparent, easy way, as well as, since most of our members have multiple investments on the marketplace, how to really view their portfolio in a very constructive manner. So those a glimpse into some of the things coming in 2018 as our investor member community grows.
And what are your biggest challenges, do you think, in 2018? Biggest challenges and opportunities? Where do you think the industry is going?
Yeah, I think, there's always a lot of discussion right now. I think one of the challenges, there's a lot of discussion around, when is that recession coming? When is the next dip? Because we've gone, longer than we normally would from trough to trough, if you will. So I think, one of the challenges is a little anxiety amongst the community of, people don't want to be the last one in on a deal. And so, I think being clear with people in terms of, what are leverage rates that developers are using, what are soft places maybe in certain markets, and trying to give a little bit more clarity of, what the outlook looks like from an economic and specifically, obviously, a real estate perspective.
Don't forget to pick up your free plain English summary of the background to CrowdStreet.
Certainly. So my background is squarely in the internet and software space for the last 20 years of my career, and really bringing technology into industries that have not adopted the internet and software for the betterment of their customers as well as the operating efficiencies. I do have a background in financial services. I don't like to say it, but I was in banking years and years and years ago.
Okay.
So don't hold that against me.
Right, the dark side, right?
Exactly. But it did give me a good appreciation, for the financial institutions and the financial services and consumers. And it served me well when I met Darren Powderly, my co-founder here at CrowdStreet years later. And Darren comes out of the commercial real estate space. He was a partner at a well-known firm here in the Pacific Northwest, and he was looking for a co-founder who'd built internet and software-based businesses before. And so really the marriage between the technology and an industry that traditionally has not adopted technology to really transform real estate investing as we have known it for decades and really bringing it online.
Okay, so when was that you met Darren, and how did you get to know him, and how did you buy into his story, or did he buy into yours? How did that work?
Yeah, I got introduced to Darren in the summer of 2013. Darren had already come up with the concept of CrowdStreet and the idea of democratizing access to commercial real estate investing. Really, the whole idea of CrowdStreet came out of the Great Recession, if you will, kind of the 2008 big recession, and this idea that too much capital is sitting in too few hands, and that can have some negative, implications. Idea that too much capital is sitting in too few hands, and that can have some negative, implications. And so, if you remember, 2012 was when the Jobs Act was created, something that Congress and the President at the time came together on to really say, how do we further decentralize maybe some of these things that have been around for, I think our securities laws are almost over 80 or 100 years old, and how do we modernize those to, decentralize that wealth creation, to decentralize the formation of capital and things like that. And then there were subsequent, rulings, Title II of the Jobs Act and Title III and Title IV that helped to solidify what was going to happen. And so when I met Darren in 2013, those other things hadn't come out, but there was definitely, Darren had a great vision about, how to do this, and really needed a co-founder complement his skill sets. And so we launched our
challenges, Tore, at that early start of your company.
Sure. I think one of the largest challenges we faced, and it's not uncommon when you're going into transform and disrupt an industry, is that you have to do a lot of education, right? The legislation, the securities laws had been changed, but there was still a lot of questions and ambiguity about it. So in those early days, we had to do a lot of evangelizing and a lot of educating commercial real estate developers and operators, investment firms who were intrigued by this, but really had more questions than they had answers. And so we had to be part of, a subset of people out there really sharing knowledge and information, and many times connecting them to other experts, whether it was attorneys who'd worked on the SEC and legislation to enable this to happen, whether it was some of those early adopters, some of those customers who had taken the plunge and were the innovators and looking to do this, and connecting them to, those individuals so that they could learn from them. So that was really, one of the biggest hurdles was really getting the industry to understand, that this was possible, it was legal, it was possible, and it's going to actually benefit their business as well as benefit many, many consumers, investors across our country.
So explain to me what it was that you had to explain was possible that they didn't understand was possible.
Sure. And maybe I'll start with, let's talk about, their way of traditionally doing business. The majority of the types of, I call them sponsors, right? They're the commercial real estate developer, operator, investment firm who's going out and acquiring either an existing asset, it could be a senior housing facility, an office, a multifamily complex, the commercial real estate developer, operator, investment firm who's going out and acquiring either an existing asset, it could be a senior housing facility, an office, a multifamily complex, storage facility, whatever their specific asset type and geographic focus that they've had for usually decades. And the way they've traditionally done it was, they would put together a private placement. They would do a Reg D 506B offering, traditional Form B filing, and they'd go out to those individuals that they knew and had a substantive relationship with to raise their capital. And they'd usually, the usual capital equity amount that they were looking for was anywhere between, call it $3 million and $8 million, because their project value was in that squarely in more of the mid-market 20 to 40 million range. And so they were flying underneath the radar of, getting a big institutional check of 10 or 20 million, but they definitely had built up a network of high net worth investors that they 5 and 10 acquisitions each year. Sometimes they were doing ground up, but a lot of times it was value add to an existing asset. And so what we really had to share with them is that, Title II of the Jobs Act, which was passed in September of 2013, the Title II, legislatively created what's called the Reg D 506C. It's a little play on the 506B, which basically said that you can do that private offering, but now you can make it public. You can actually generally advertise, you can generally solicit investors, and therefore, i.e. you can use the internet to promote that you're actually making an offering, a securitized offering here to invest into that project. With the caveat is that all those investors have to be verified as accredited investors. You can have as unlimited a number of those investors. However, there has to be a extra step of verification process. So that was kind of the education process of that. That was kind of the education process of that, this has been passed. It is legal. Here are some of the stipulations to it. And this is why the CrowdStreet marketplace is really set up to give you that kind of the medium, right, to go and advertise. And we've gone out and had thousands of accredited investors register on CrowdStreet because they're looking for access to great sponsors that have these offers.
So what are the pros and cons from a sponsor's perspective then? If you've got this constituency of sponsors that have been doing it for generations perhaps, certainly for decades, why would they take the leap to doing it online? Why would they need to do that, and what would be the obstacles that they might encounter that's different?
Sure, great question. And I think one of the key benefits, and we hear this from the sponsors that come to us and use our marketplace, is the ability to reach investors outside of their, as we know many times, the way that they gain new investors with their deals is that they get referrals. And that word of mouth is great in the offline world, but it only goes so far, usually confined to your geographic region. So first and foremost, what they really like is the fact that we are, by putting their offering on the CrowdStreet marketplace, making that available to investors. They could be in Seattle, Washington, and they could have investors in New York City and San Diego and Los Angeles, Florida, all over our country, looking at their offering at 10 o'clock at night, right? Sitting on the couch, sipping a nice glass of wine with their spouse, and looking at their offering and deciding whether they want to invest. Many times in that offline world, they've had one-on-one meetings with those investors. It's very time-consuming. So that's really important to them. And the second kind of key aspect that's tied to kind of that, I call it the acquisition of new investors, is also the efficiency by which they can not only acquire those new investors, but by which that they can process the investment itself. And so by kind of automating and streamlining the fundraising process from review of the information, all at their fingertips, through the actual investment itself, deciding how much an investor wants to put in, e-signing documents, and then funding their investment. And then post-fundraising, another thing they like is that the ongoing kind of communication with those investors is done through an online channel, which again brings with it many more efficiencies and the capability that now that they've got 10, 20, 30, maybe 50 more investors that they're working with, they can actually do it in a very efficient manner.
So what's an online channel of communication that's any different from regular email?
Yeah, so, and I'll use as an example maybe how they've had to distribute K1s, right? So
communication that's any different from regular email.
Yeah, so, and I'll use as an example maybe how they've had to distribute K1s, right? So most of these deals are set up as an LLC, a traditional format. And again, the format is no different when they're putting their offering online. It's usually set up as an LLC, and they're bringing investors in. They distribute capital to them on a monthly or a quarterly basis based on cash flow. And then they're at the end of the year, right? Because it's an LLC structure, they have to distribute K1s. In the traditional way, they either have to mail those out, or if they get electronic consent, they can email it out with a password protection. But I always say, and again, having been in the identity management and online space earlier in my career, that the email channel is not always the most secure. And so one of the ways that we not only make it more secure, but also more efficient is by an investor having what we call an investor room when they log into, comes to that wonderful tax season where they're trying to distribute hundreds, if not thousands of K1s. They can simply drag and drop, and the K1s get uploaded automatically into each individual's investor room. The individual investor will get an email communication that simply says, not with an attachment because of security concerns, that if you log into your secure investor room, you now have access to that secured K1 document. So you've now minimized, again, a security concern by sending a PDF document over an unsecured channel. You've also improved from a communication, gone from one to many with literally one click of a button instead of having to do individual one-to-one communications.
I see. And from the sponsor perspective, is there more communication early on in the deal? Do they have to field a lot more questions? I've heard certainly that that's a concern of sponsors, having to deal with so many people initially that it can become burdensome. Have you found that to be the case? And if so, how have sponsors been handling that?
And that was definitely some of the concerns, and back to some of the roadblocks we ran into was, if a sponsor, and again, back in 2014 and 2015, a sponsor had never put their offering online. They'd never generally advertised their offering, right? They'd always had distributed it to a very close-knit group of people. And many times when they were doing that, they were faced with a lot of email exchanges, a lot of phone calls. And so they came from a world where, let's call it investor relationship management, was usually pretty cumbersome. It was usually a pretty manual process. And so when they were bringing their offering online, they did feel concerned about, wow, am I now going to be fielding calls by a lot of investors? Am I going to be answering a lot more emails? And I would have these conversations, having brought industries online and seeing what can happen, that usually a consumer that comes to you and gets exposed to your brand and your company through an online channel does not want to take that relationship offline. You don't go to Amazon.com to buy a product because you want to call the company and learn more about the product. You want to go review and see everything and read about everything about that product online and be able to make your best educated decision. And so part of CrowdStreet's responsibility is to make sure that when we take all of their offering material and we digitize that we put it into a web environment that is really easy for an investor to get everything at their fingertips, whether it's the sources and uses, the table of the deal economics, the hypothetical investments, that they can really, many times they would have asked those questions over email, and our investments team can really help coach, and let's make sure that it's all at the fingertips of the investor. Now, that's never going to guarantee that you won't have investors that pose questions, but what we also do is we run webinars so that every offering, about a week after it goes live, investors can get invited and they can register to join a 1-hour webinar where the sponsor's talking about their deal, they're fielding questions. And I think what I really love seeing on those webinars is you could have 100 or 200 investors participating, and part of the community aspect is that an investor can pose a question on there and the other investors have the benefit of listening to the response from that question. And that's something that, again, when I look back at the offline world, it's many times a one-on-one relationship, investor to sponsor. And here you've now created a community where other investors can get better educated and they can learn by hearing from other investors. So there's lots of benefits. And then also that for a sponsor really minimizes the noise factor, lots of benefits. And then also that for a sponsor really minimizes the noise factor. If they can spend an hour, they can talk about that, and it's recorded for other investors to listen to. It's repurposed. So many times finding ways to bring the offline world into an online paradigm.
So is there a concern of sponsors putting their deals out there that they're also advertising their strategies and deals to competitors?
There is definitely that sensitivity. And so it is a fine balance between how much you want to publish and how much is kind of, if you will, behind the firewall. So there is confidentiality agreements that investors have to agree to, click through confidentiality agreement, right? That is that extra degree of security and comfort about what they want to expose.
And sponsors, in your case, do have direct contact with prospective investors. Is that right? They're contacted directly by investors, and dialogue is direct, or does it go through you initially?
Yeah, we allow both. Many of the sponsors the majority of the sponsors that we work with all have worked with investors in the past, and that's part of one of the criteria we look at when determining if a sponsor is proper for the CrowdStreet marketplace is have they worked with investors in the past? How have they done from a performance perspective for those investors? And so they're not unaccustomed to fielding some questions. However, we do have the conversation, say, look, think of CrowdStreet investor relations team as a little bit like a concierge service where if you'd like, we can play that kind of air traffic control. And if a question comes in, if we know that it's contained in the document, we can point that out to the investor so that it doesn't even have to go across to you. But obviously there's questions that we're not in a position, or legally can we field questions about the deal if it's not a factual document piece. And so we will only escalate to the sponsor those questions that are required. We've also allowed investors the ability through the online channel, if they've got feedback or key questions, they can submit that directly online, and then the sponsor can choose at their leisure when they have a time available to either respond to it or ask CrowdStreet to send them a document or other information.
I see now, is that Q&A online also shared amongst all interested investors, or is that typically just one-on-one, unlike the webinars?
Yeah, it's a great question, Adam, because it's something that we have looked at how we could further expose these community aspects for the betterment of the investor community, but also for the sponsor. There is a little bit of concern, as you can imagine, for all of this to be open in a complete forum environment. So today, the questions that get posed by the investors are going directly through the channel, directly to either our investor relations team or investor relations and the sponsor's investor relations team. There's some privacy concerns there I just want to be very cautious about, both for the investor as well as for the sponsor. But if we get consent on both sides, we're looking at how can we provide a more forum environment that both sides feel comfort in and that they can gain, more benefit by exposing more.
Is that something that people are asking for, or is that just what you think might be useful?
Some people have asked. They've asked that, could they, be able to communicate directly, like as an investor, could they directly communicate with other investors on the CrowdStreet marketplace, right? Almost like following the pros, Yeah. And so, but again, this is a sensitive matter. People are, investing into deals. It's a whole different level.
Okay, so let me ask you about how the online investing environment has changed from the prior environment where you did know somebody and wined and dined them prior to doing a deal. What I mean by that is the way that deal structures have changed. One example is this, you mentioned it, the monthly distributions. Now, I might be wrong, but I'm fairly sure that for my investing and fundraising days pre-downturn, there were no distributions on a monthly basis. They were typically accrued over time, and then once there was liquidity in a deal, then there would be distributions. But I've noticed that it seems to be more commonplace that sponsors do distribute on a monthly or quarterly basis from inception. Is that something that you see as being different from the way it has been done previously? And are there any other structural changes, something that you see as being different from the way it has been done previously? And are there any other structural changes that you've seen between the demands of the online world and the demands of the kind of private relationship world?
Yeah, so I think from a structure perspective on the distribution of capital, on a current basis, we really haven't seen, the sponsors change the structure of their deal to align with maybe, the online investors' requirement for having cash flow, if you will. Most of those deals, they've already kind of come up with their waterfall structure. They've come up with what their, anticipated current yield is on that investment. So I don't think they've changed that. Maybe they've become more conscientious about the fact that that online investor, that they haven't built that relationship, does like a current yield, right? Do understand that certain deals will not have a current cash flow to it, whether it's a ground up development or whether it's a redevelopment. And the sponsors are very clear from the onset that, it could be maybe an 18-month time frame or 12-month time frame until there's any, current cash flow from that project. So investors have that ability, and they know that maybe on that redevelopment, there's no current cash, but there's a higher IRR potential, right? And maybe it's over 2 years instead of over 7 years. And so what we have seen is investors like to create that diversified real estate portfolio where they can pick and choose, maybe projects that are cash flowing currently versus those that might be more realized on the back end. So I don't think I've seen as much as structural. One of the structural changes that's very significant, and I think could not have happened if we didn't move to the online world, is the ability for sponsors to take a lot lower investment size. Because again, this goes back to the education. When we were working with many sponsors in 2013 and 2014, they were used to taking $100,000, $250,000 checks from their high net worth investor network in the offline world. And when we talked to them about bringing their project online, we, requested that their minimum investment size would be $25,000. Well, you're a 10x difference in many cases to what their usual minimum investment is. And you could imagine, again, going back to that conversation about the customer experience and how much contact would they have, because they'd say, look, for $25,000, I can't be on calls all day, with these investors. And so it took a little bit of time for them to get that, but I had one of our sponsors at a conference get up and talk about how he had 30 new investors come in through the CrowdStreet marketplace, and there was a little aghast in the audience, and somebody raised their hand and said conversations with, and they were putting in, maybe a lot higher than the minimum amount, but he goes, I didn't have to have one-on-one conversations. So you can kind of see how that was definitely a structural change that these sponsors had to get used to. And I think once they tried it once or twice, they realized the huge advantage of now and actually growing their investor base beyond their local market.
That's very interesting. So how are investors reacting to CrowdStreet and what you're doing? What are their challenges, or what are the challenges that you face to making the case to investors?
Yeah, I think one of the things, and again, it's similar to what we had to do on the sponsor side around education, is to really let investors and consumers across our country understand, number one, why this was suddenly available, right? For an industry that for decades they couldn't get access to, right? They had to get a personal invitation to meet the sponsor, right? Understand, number one, why this was suddenly available, right? For an industry that for decades they couldn't get access to, right? They had to get a personal invitation to meet the sponsor, right, from somebody who'd invested with that sponsor. And many times, even if they got invited, they didn't want to put in $250,000. They said, I have 25 or 50K to put to work, or, I want to spread it around to many deals. So again, one, educating the investor as they came onto CrowdStreet of why this was possible and how we made it really efficient for them. Number two, big question from investors was always like, and again, it's kind of like the offline world, how am I getting to meet these sponsors? Like what did they go through before they came to the CrowdStreet marketplace? And so we're very upfront with our investor community around the vetting process at CrowdStreet's investments team. And we have a team of 8 people who come out of the private equity real estate that they're offering. So we have got an online video and detailed process around the vetting so that investors know we can't, we're not a bank, so we don't underwrite the deal. We can't say that we're doing due diligence per se in the traditional sense. But we are very clear about the vetting and the background checks that go on behind the scenes on these sponsors before they actually show up. And then the investor appreciates that, right? This isn't Craigslist. Nobody can just kind of come and post their deal. That there is quite an extensive process. So that second was a really important thing to investors. And I think third is, once they've invested in one of the projects and they've gotten accustomed to it, we're seeing that, most of our over 60% of our investors today are repeat investors on the CrowdStreet marketplace. And of that repeat investor base, majority of those have 3 or more projects they've invested in. So they're starting to realize that they can now create a diversified commercial real estate portfolio through the online channel, right? And traditionally, the only way they could get diversification was either investing, again, locally with a developer they knew, or they could go through a non-traded REIT or possibly a publicly traded REIT to get that diversification.
So what is the advantage of investing through CrowdStreet in individual deals that you look at and have to personally underwrite as an investor versus going through a REIT? And I noticed that you've also set up a REIT. So tell me what the difference is between those two scenarios and the pros and cons from an investor's perspective.
Yeah, I think, and you're right, Adam, we have single assets on the marketplace. We also have funds, so special focused funds. It could be in a specific asset type. And then we also do have full-blown REITs that are listed on the CrowdStreet marketplace. And we feel that, an investor should have that type of choice at their fingertips because they might want to put some capital into a REIT that automatically, or a fund, I'll just use those two interchangeably, but they might do that because they can automatically get diversification across, even if it's a focused on, senior housing or multifamily or office, that they're getting some diversification across, the assets in that fund. However, sometimes, as we all know, because of the fund structure, there might be a higher fee structure. There could also be a lower potential returns, but it is also, taking out, de-risking some of that by diversification. However, the single asset, you have more exposure to, maybe a specific geographic region or specific asset type, as well as obviously the specific sponsor that's managing that. But I think what's interesting to watch is the portfolio effect that investors are realizing that they could invest in a core plus office in Washington, D.C., and they could also invest in the kind of opportunistic redevelopment project in Memphis that has a higher risk, but also maybe a higher IRR, and that they can build a kind of their own portfolio of single assets that can give them a diversification, but maybe their return can be at a higher rate.
Now, do you operate a REIT as well? Did I hear that right? How does that work?
We don't operate our own REIT. We do work with players that operate their own REITs, and so have been doing it for years. So I know there's others in our space who've gone that step to create their own e-REIT, and we've just heard from our investors they prefer if we continue to bring sponsors on that have that expertise themselves.
Right. So what have been the biggest challenges for you coming from, a tech background and migrating into this world?
Yeah, I think, and again, I've worked with many different industries, coming at it from a technology perspective. And I think, whether it was, healthcare, education, publishing world that I've worked with, many different verticals and industries in my past. It's always understanding, where are their biggest frustrations, what are the biggest obstacles that they're facing, because it's always unique across industries. And then, what has been their adoption and trepidation of leveraging the internet. And again, when I joined Darren, to me, I always felt like, again, the online consumer is not going to take things offline. So I took things for granted that I had to back up a little bit and understand better about the world that our sponsors were coming from, about, some of their pain points on investor relationship management, on processes. And so I really spent time with Darren as well as a lot of our customers understanding, more about their world and more about how we can solve things for them, right? Because at the end of the day, we're here to help both the investors as well as the sponsors, and better for both of them.
Are you allowed to invest in deals yourself on the platform?
Yes. So our policy here at CrowdStreet is anybody that is qualified can invest in any of the projects on the marketplace. There is no special treatment given because it is a open internet out there that people can register, and I don't want to say no to a CrowdStreet employee member that they can't invest. Now, there's no special treatment given, so we're making sure that there's nothing extra that they get, right?
And are there any plans to change your model at all and pre-fund deals and then back rather than teeing them up just to the investor base as you do now?
Yeah, today most of the sponsors haven't asked us to really pre-fund the deal because, we took a different approach from some who did go that SPV model where they were going to pool investors into their own LLC and they were going to take balance sheet capital to supplement the fundraising. We took very much a road less traveled, also a road that takes longer until you've built an investor base that has thousands of investors. You can't stand up straight with a sponsor and say, I have very high degree of confidence of filling the equity portion that you're asking us to fill. And many of our sponsors will come to us and explain that they're giving us a sliver of the equity because they have their own current base of investors. But to answer your question another way, we did actually take a pretty significant pivot as a company back in early 2015. We learned from those sponsors that were using our marketplaces, that not only did they love that efficiency, the capability to instantly get in front of thousands of investors across the country, but they also saw the capability of our technology platform. And so in 2015, we launched our software as a service. It's a white label version of the same software running our marketplace. And today we have 85 customers that are using our software on their websites under their own brand to manage their own investors and to, create a more online, innovative way of fundraising and investor relationship management. And so that's a kind of key differentiator, I think, of the CrowdStreet platform.
That's very interesting. So those clients that white label your platform, are they also tapping into your investor base, or are they going it alone with their own marketing and their own investors?
There's various reasons. Some of them might say, I'm not quite ready to try a marketplace. I want to keep my deals private. I want to continue to do a 506B, but I'd really like my 500 high net worth investors to be able to log in. And instead of me emailing packets out, I'd like them to be able to log in and view everything online, to be able to click invest now and to go through that process, but I'd like to still keep it private. So 2/3 of the software customers that we have never used our marketplace. But what we do like is that 1/3 of them today have actually put select deals of theirs on our marketplace in order to kind of grow their distribution, right? And they are open to kind of, more general advertising. And they're seeing the benefit of both. So they are using the software on their website. They're running their investors through it. They have one dashboard and they can see their fundraising process, both how it's running on CrowdStreet's marketplace as well as how they're doing with their own investors from their website.
Fascinating.
Marketplace as well as how they're doing with their own investors from their website.
Fascinating. So, Tore, let me ask you, where do you think, this is an extremely young industry, right? Since the Jobs Act and since the various regulations actually came into effect. Where do you see the industry going? Where do you think it will be in the next 5 or 10 years? And what aspirations do you have for CrowdStreet?
Yeah, it's a great question. And I think back to when Darren and I got together in 2013 and met up, and the passion, the vision of democratizing access to commercial real estate investing, and that idea of how we can transform real estate investing to make it accessible, to make it transparent, to make it efficient. And I think we're just scratching the surface. But I think one of the things I've noticed in the last 6 months that gets me really excited, and I think is a part of this market that has not opened up yet, is the ability, just scratching the surface. But I think one of the things I've noticed in the last 6 months that gets me really excited, and I think is a part of this market that has not opened up yet, is the ability for the non-accredited investors to participate. And again, this is a stair-step thing. It doesn't happen overnight, but we've seen a lot more of sponsors, the receptivity to doing a Reg A plus filing, a tier 2, where they can raise up to $50 million, and they can do it through a general advertising, and they can make it available to non-accredited and accredited investors. I think that is one of the phenomenons that's going to happen over the next 3 to 5 years, where people now can put in $1,000 or $3,000 or $5,000, or again, you can't do that without using automation and technology. So that's number one. And I think the second thing that I'm excited about, and that I think we're going to see happen, is, one of the things we didn't talk about, Adam, is, commercial real estate investing is great, right? Cash flow, right? You were investing and you were going to be in that asset for the next 3 or 5 years before you realized your gains. And so I think it'll be interesting to see how we can take what's traditionally been a kind of illiquid investment. And then again, this is why, publicly traded REITs have an advantage, but they also might have a lower return because you have a liquidity kind of built into into that investment, because you can trade it on a daily basis. I think what I'm following and what I'm looking at, it's very interesting, are things like blockchain, things that will create an ability to maybe take and securitize something and make it easily transferable and mark to market in a way that makes this investment maybe more liquid.
Well, there are, with Reg A plus offering, there are secondary markets, are there not?
There are, yep. There are definitely some secondary markets that are creeping up and available, which is great to see.
Do you see any analysts beginning to look at the crowdfunded market to express opinions?
Yeah, exactly. So we really haven't seen the big ones weigh in yet. I think we will over time. We are seeing, on the sponsor side, we're seeing bigger players, more household names like a Heinz that are going down this road, right? We just announced it today, actually, about the Heinz using our software, to make it more readily available for their financial advisor network to kind of, offer the materials in an online fashion. So I think as you get more larger players starting to adopt this, it will also kind of bring forth the advisor community, analyst community.
As a successful entrepreneur and real estate guy, what are the keys that make you and your business successful?
Yeah, that's a great question. I think there's a couple key habits. One is interaction with my team, and I think we've talked about we're in an online world where there's virtual things that are going on, artificial intelligence, all these other things, but it still is really important to have kind of that interaction with individuals around you, and especially I'm proud of the team at CrowdStreet, not only the executive team, but everybody that's around us. We're 45 people strong now. And I like to say they come with superpowers. And unless I'm interacting with them, daily, and many times we're always traveling, we can't do it, but being able to interact with those individuals and to help accentuate, the best of what they can bring, right? Because at the end of the day, it's the people here at CrowdStreet that help our investors, that they help our sponsors. And so that's one really important thing. And I think another, key thing is, and it's part of the core values of CrowdStreet. One of our core values is constant learning and knowledge sharing. we're in an industry, commercial real estate and technology, that is, not a very, it's a road less traveled, if you will. And so, we need to constantly be growing our knowledge base and learning from our customers and hearing what they have to say, and then sharing that knowledge and exposing it. So I think, that constant learning and knowledge sharing as a successful entrepreneur, if I don't do that every day, and if I don't have my team doing that, we don't grow as a company. We don't grow as individuals.
All right. So the second question, what has been the hardest lesson that you've learned in real estate?
Yeah, good question. And I think, again, since being an executive in the technology space, and where I have not traditionally invested in real estate, participated in real estate, back in 2006, I got introduced, to a real estate developer. This is, again, in the offline world, where it was a friend of a friend. I invested a small amount of capital with that developer. By 2009, unfortunately, that investment was underwater. And I think the lesson I learned is that, and it's carried through to what we do at CrowdStreet, which is that there needs to be a vetting of that sponsor, of their track record, what they've done historically, and really getting better educated around, what to look for when investing with a sponsor in a specific deal. What are the economic terms? What is what does the market study say? And really doing your diligence as an versus just, taking a referral, if you will.
And my third question, if you may have answered this actually already with that one, but if you were to give one piece of advice to somebody who has not yet invested in real estate, but who is interested in investing in real estate, what would that advice be?
Yeah, I think, and I did touch upon, getting educated, but I think what it really also comes down to, and it's the very first part of the 3-step vetting process that CrowdStreet does, and we vet the sponsor. And I think my piece of advice would be, yes, definitely look at the type of project, look at the pro formas, the economics, the geographic studies, the returns, all of those things, all the financial aspects. But I'd say always look at the sponsor, their track record, their experience of working with investors. How did they also, again, unfortunately, we had 2008 and beyond that happened, but it's also a litmus test to understand how did sponsors treat their investors during the very difficult times. And so I always say it goes back to the sponsor. They're the fiduciary at the end of the day of your investment.
Spinning back to Tore's first comments about the prognosis for the future, there is no way to predict which direction the real estate market is going to go. It could keep climbing for years. It could plateau and then climb or fall. It could crash precipitously. There's no way to predict it. The only way to prepare for the inevitability of a cycle is, however, to be aware that cycles do exist in real estate and to adjust your investment strategy accordingly. My personal preference is to focus on high-quality assets with credit tenants, whether residential or commercial, and projects that have low leverage, or in other words, a view to the long term. If you are more bullish, a more aggressive to the long term. If you are more bullish, a more aggressive posture might suit you better. Either way, having sites like CrowdStreet to source deals from gives you the opportunity to select what you like and to invest accordingly. My next conversation will be with the indomitable Max Sharkansky, managing partner at Tryon Partners, and another of my sponsor guests. Max has been a successful developer and has raised crowdfund real estate equity capital. Listen as he discusses one of his multifamily deals in detail in the next episode. And don't forget to subscribe to the series by going to the National Real Estate Forum.org website, nreforum.org, and hitting any of the links that I've included about halfway down the page to whatever platform you listen to podcasts. Thanks for tuning in, and thank you also to Tore Steen, CEO and co-founder